Welcome to the Multifamily Investor Nation podcast. I'm your host, Dan Hanford, one of the managing partners of PassiveInvesting.com. Thank you for being with us here today. We do have some special guests. And yes, I did say guests in plural. We have three of them with us today. We have Maggie, Jen, and Lana from the Sage Investing Group. We're going to be talking about this Barstone Apartments property that was acquired just last month in September of 2021 out of Dothan, Alabama, 126 units. Before we dive into that asset, let me turn it over to Jen and have you introduce yourself and the group and before we get started.
Thank you so much, Dan. It's an honor for all three of us to be here on your podcast today. It's something we've been looking forward to for a while. I'll go ahead and kick off the introduction of the group. So we have Maggie and Lana here, and we all actually have pretty similar professional background, which is rooted in audit and risk management. So prior to transitioning full-time to real estate investing, we actually, our job in short before then was to, what we did was audit, which was we gave company stakeholders, such as the board member, the investors, and in my case, donors, because I worked at nonprofits, comfort over the reasonableness and the integrity of the company's financials. So collectively, all of us have a combined 35 years of experience in audit and accounting. And we did some real estate investing on the side during those years when we were working our W-2 jobs in this industry. And so it's a little bit more background. I met the ladies actually through our multifamily mastermind group in late 2019. And I had co-sponsored at that point a handful of deals on my own with my husband. And then I met Lana and Maggie. They came into the picture. You can say that we dated for a few months after we met. And in mid-2020, we decided to be exclusive and form our little team, much like you guys with your partners on the PassiveInvesting.com team. And so we realized we actually had a lot of complementary skill sets, probably similar to you guys. I like working with investors and I like working with operators who build the relationships. And Maggie, she enjoys being strategic and going out there, forming relationship with brokers and sourcing the deals for us. And Lana, she is a very conservative person by nature, and she excels at all things numbers and Excel, no pun intended. And so naturally, she is our trusty underwriter on the team. So just a little bit, like if most people that got started in multifamily investing, I think we all started with single family. And so we got involved in multifamily because we realized that it didn't really take too much more effort, I guess, to go from, one unit to multiple units. And we really like the economy of scale that we see in multifamily.
No, that's great. I like that. It's a great introduction. Glad you guys got together. I think you got a powerhouse team there. This is going to be a great podcast. So let's go ahead and dive into that. So we have this asset we're going to be talking about right now called Barstone Apartments, Dothan, Alabama, 126 units, bought just last month in September of 2021. Talk to us a little bit about how you sourced and how you found this deal.
Right. So I can kind of answer this one. So Dothan, Alabama in general was not a market that we were looking at. We kind of came across this almost by happenstance. So our primary markets were Atlanta and the Carolinas. We like to stay in the same time zone, East Coast. And these were markets that are familiar to us, familiar to our investors. It doesn't require too much work on why we like these markets. If you see an opportunity, it's an easier sell. But as part of that journey, we've built a lot of great broker relationships that are based out in Atlanta. And they cover more than just Atlanta market. They cover the greater Georgia state, if you will. And as part of that, they'll also cover Alabama, which is right next door to Georgia. And so there was a broker that we had a really great relationship with. We had met him almost, I would say, a year and a half, almost 2 years ago. And we've been looking at deals that he's been sharing with us, during that time. There were a lot of deals that just didn't work out, but we would still underwrite it and would provide feedback in hope of landing a really good deal. And, a year and a half later, 2 years later, this was one opportunity he found, and he was like, hey, take a look at this one. Let me know what you think. And it penciled out really well.
Oh, that's great. That's great. So you found it through the broker. How soon after you found out about this deal from the broker did one of you go and actually tour the property?
I can jump in on that one. So personally, we didn't go out to a property until we have the physical due diligence. So it came on the radar and probably in sometime in March, but we haven't had it actually have it under contract until early June. And that's because it's off market. There was the seller did not want us to go in and disturb the tenants and also the on-site management. So so there was a little bit of back and forth, and we were working on limited information. But it's not to say that we didn't have we were totally blind. We did have eyes on the property. We did consult with two local property managers to kind of drive by it. We also had another partner who had been into this, been in this market, is familiar, and has a few properties in Montgomery. So who has all these feedback has we were collecting it. So we have a pretty good idea of what we're getting into, but we didn't have actually, didn't actually get into the property until due diligence.
And let's step it back just a little bit now that because I know we're kind of pushing forward and now we're under contract, because that's when the tour obviously actually happened initially. And a lot of times when you have an off-market deal, that's what happens, right? Because they don't want you to be disturbing or tipping off the property management, them leaving or getting upset or anything like that. And then also the residents, disturbing them as well. How many rounds of offers did you go through before you actually got a kind of a confirmed number that was accepted by the seller?
Yeah, so this actually went through 3 rounds. I know that's quite a lot, but I think, there wasn't, because it is off market and the broker, so the owner, they were sort of limited in sharing information. We didn't get like the full T12 and the rent rolls, like the typical things that you would get on a fully marketed deal. So we were working with very limited information in the very beginning. And so we submitted a number that we felt comfortable with what information we had. And as we kept submitting our offer and the deal became more serious, the seller was a little bit more forthcoming of sharing more information. And so it kind of went 3 rounds just because it was a little bit of, back and forth on kind of him or, them assessing how serious we were. So it was three rounds.
So let's kind of walk through those different rounds that you guys had. Initially, when you were first looking at this and the broker gave it to you, did they give you any type of back of the napkin number or guidance or something like that on this property?
No, not really. So he gave us a CoStar report. He knows what we like. Because we've been working with him for over 1.5 to almost 2 years. We always gave him feedback, like why we didn't like a particular deal. Like we want a strong demographic, high, good, medium household income, high area home values that kind of give us a little idea that the city is progressing and there is a good market data point that we can point out to that, and it's not what do you call it, a regressing market. So that checks the box. So he knows that is something that we should take a look at. The other thing was that there is some activities in the market that was showing some kind of proof of concept. There was some comps that are going through renovation plans, and they were able to demonstrate they were able to achieve certain pro forma rents, if you will. So we weren't going completely blind. So he was pointing out here, look at this property, look at this market is something you should really pay attention to. So he didn't give us like a full scale underwriting, if you will.
And what was the final number that you guys got this under contract for?
8.442 million, or 67,000 per door.
And let me see. And when you got this, when you got that final number and they accepted it, how soon did it take you to go from kind of the accepted offer or the LOI stage to the actual PSA stage?
So that was, once we find out the firm of the number, it went by pretty quick, because like I mentioned, like it took us months to get to the PSA, but once it's PSA, actually the seller was very forthcoming and very reasonable afterwards after the PSA. So he would give us everything that we needed in a Dropbox. Granted, there was some information that we had to piece together, but once the PSA signed, there were some nuances too. We practically would love to go in and do an early access, but the seller again did not want us to go in and disturb his tenants and his on-site management without something solid. So we had to sign the PSA, but to compensate that, he gave us 15 days before our money go hard after the PSA signing. That's our first round when our money go hard. So we had some timing in between before we had to put in hard money for us to conduct all our due diligence from physical to lease audits to get us comfortable that everything checks out.
So that was one of the other things I was going to ask you is was there some sort of contingencies in your offer where if for some reason the financials that you never got were not what they actually were what you were hoping, would you be able to back out of that offer? And I'm assuming that extra 15 days is really what allowed you to give you that kind of 15-day look at it before anything went hard.
Yes, Dan, you're talking to a bunch of auditors who are very risk averse. So that was very nerve wracking. But so I think in that case, in that sense, I think we've been working with the seller for so long, and I think we've kind of built a trust with him. And that's why we were able to negotiate on that level. So we get comfortable and he get comfortable with us too.
Yeah. It's really great when you're working with a very understanding seller. The seller was somewhat, sophisticated. He's been in real estate as well. So he knew what it is that we were looking for. He didn't think that our demands were so unreasonable. And there are a lot of times where we may have forgotten to ask for something. He's like, here you go. You should take a look at this too. So it was a very amicable kind of relationship that we built over that time, which made for an even smoother transition.
So was the seller just like a smaller kind of mom and pop type operator? Was it, or is it a group, or kind of who was the seller?
They're definitely, I won't say they're truly mom and pop. They're pretty sophisticated, but they're smaller family kind of owned. They have a few properties. Most of them is in Florida. So, and of a section of this Barstone and Dothan. And I think that's one of the reasons why they wanted to let this one go, because they want to be closer to all the other assets, and they also live in Florida, which makes sense.
All right, so we're now through the offering phase. We've actually now got it under contract. The hard money doesn't go hard until after 15 days, but walk us through the terms of that hard money. So obviously, as far as like how much hard money was it? And obviously there's going to probably be an amount that goes hard up front and then maybe some more after due diligence, things like that.
Yep. I think, yeah.
Go ahead, Maggie.
I think it was about, it was 1.5%, or it comes about $130,000. And it's broken up at 2 waves. The first wave, $80,000. So like I mentioned, the first wave went hard 15 days after PSA was signed. And the second wave is after our due diligence. And again, the seller was very fair in this. Typically our due diligence is 21 days or 30 days, but he gave us 40 days to compensate all the time that he didn't give us any information up front. So.
Well, it sounds to me like the seller was definitely willing to work with you, but also wanted to stay within certain bounds or certain guidelines or whatever. So that's actually a good thing there. Yeah. So now we're in the due diligence process, right? So can you walk us through different things that might have came up during due diligence that you had to take care of, or was it a pretty clean due diligence?
So I was lucky enough to attend the due diligence with Maggie, and surprisingly, it was a pretty clean due diligence. We went there and the property was really well maintained on the interior and exterior. We actually saw that there was a lot of renter pride on the property as well. And we could tell based on when we were walking through the properties, the units, like how nicely kept, how clean and well kept their units were. And, a lot of them even decorated their balconies with lots of plants. So it looked really great from the outside as well. And while we were on site, we actually pleasantly learned that the office manager has been there since 2004. And so she's been through 3 rounds of ownership at that property.
Wow.
And even the part-time leasing agent, he was there since 2008. So collectively, we had a very experienced team in the office. And we were lucky enough for them to stay on with us after we took over the property. So we were lucky to leverage off of all the experience that they have. And, you know, they know all the tenants very well. They know the property inside and out. So it's a huge bonus for us. And I guess if I have to say something bad, anything unpleasant surprise. I mean, it wasn't really too much of a surprise. We knew going in that they were a pretty paper-based company because it's smaller. So I guess they just weren't up to date. They weren't up to the 21st century. All their leasing agreements, leasing documents and files were essentially, paper and put in filing folders like the old-fashioned way and filed away in cabinets, things like that. So I actually spent quite a lot of time scanning these, taking photos of these documents on our phone in case we should need these leasing documents later on down the line. And so we have electronic records for ourselves. So that was the only unpleasant thing. So sorry, I mean, nothing really crazy to share with you, Dan, but.
Well, you always wonder because when with a 1970s vintage asset, you kind of think that when you're first going into it, there's going to be something that comes up that you're going to have to repair something or replace something, but it sounds to me like this seller took care of a lot of that deferred maintenance for you.
Yeah, for sure. I mean, I think like the most on the exterior, there was like some, I guess, like what you call that, the balconies definitely needed repair. So we took all those into consideration. We kind of knew about that already, and we took them into consideration in our CapEx budget. So a lot of things that we saw was like really no surprises. We knew about them and we already kind of considered them in our CapEx budget. So yeah, they did a great job.
So let's talk about the overall business plan for this asset. Can you walk us through kind of what the plan is for it?
Yeah, I can kind of walk through that one. So I think it's helpful to kind of share where we started with. So at the time of acquisition, the average effective rents were around $645. And the unit mix, we had a range of 1, 2, and 3 bedrooms, with majority being 2 beds. And so at $645, that translates to about 61 cents per square foot. And market rent for that property, they had at 67 cents per square foot. But when we were doing our underwriting, our due diligence, Maggie mentioned that a lot of the comps were already going through their renovations and getting premiums on those units. And so now, for a similar vintage that had gone through renovations, the market was commanding somewhere in like 89 cents per square foot. So the delta you see was effective 61 to 89. We're like, wow, that's a lot of headroom. So that way there was like, okay, we can optimize, like that's our value add. That's our phase 1 of the business plan, is try to bring those rents up. And so we really thought about that in 2 ways. The first one was, even without doing any renovations, a lot of the market had driven the rents up. And so there was an opportunity to move the rents organically and kind of push that a little bit over the first 12 months of acquisition. And then the really meat of our business plan was, we would put in about, $6,000, $7,000 a door per unit, do some renovations, interior and exterior painted up, nice fixtures, new appliances, new countertops to the kitchens, things like, and vinyl plank flooring, and, try to see if we can take advantage of that delta to 89 cents per square foot. And us being conservative, we actually underwrote our pro forma up to only 81 cents per square foot. So even after market was showing something a little bit higher, we're like, okay, let's just see how the deal pencils out, staying under that, average market. And if the deal still pencils out really well, which it did in our case, let's just hold ourselves to that. And if we can do better, even, great. It's like undersell, over deliver kind of motto, if you will.
So just running some of the math here as you're talking through these numbers, it sounds to me like average square foot is just over 1,000 square feet per unit. Is that about right?
That's right.
Okay. So just over 1,000 square feet per unit. And then plan is to get it up to about $850 to $855 per unit, somewhere around in there.
That's right.
At least that's the projected pro forma plan, but
Correct.
the plan to get it above to the 89 per square foot would get it to closer to like 940 per unit on the kind of the top end of the current like market right now.
Correct. Yeah. But we underwrote it to like 850, right? But
Yeah.
night market was around 900-ish.
Okay.
Yeah.
Yeah.
Okay. So
Competitor,
850.
our competitors are when we're seeking shopping on our competitor side. They were averaging about 930, 940
Mhm.
of the renovation. So we're trying to, even though we're trying to we're on our analysis and projection, we're trying to under promise, over deliver.
Sure.
Yeah.
Absolutely. No, that definitely makes sense. So what's the overall CapEx cost for the per unit on the interior?
So for the interior by itself, that was about 800,000, a little over 800.
So 800,000 overall. So of that, there was 126 units. So right at about $6,300 a door, somewhere around there.
Correct. Yeah, we estimated around 6,000 to 6,500 a door for the interiors. Yeah, but our all-in is about $1 million. So we have about a budget about 8,000 per unit.
Okay. And then so the rest of that would be for the exterior, which is right about 200,000 for the exterior.
That's right.
Okay,
Yeah.
so 200,000 for the exterior. So walk us through. You kind of walked through a little bit on the interiors, kind of what the plan is to do the renovations there, getting it from the 645 a unit of average effective rents to the 850 across the board. What's the plan for the exterior?
Yeah, so they did have like a playground, a dog park off the property, but it's, aged quite a bit. So we thought it would be nice to freshen all of that up with, new playground sets. I think we also wanted to put in a
station. A dog
yes,
washing station.
add in a little nice amenities, right? Dog washing station. Thank you.
Yeah, we also have a budget for water conservation too.
Right. We did want to put a water conservation plan, freshen up the laundry room, and put in a nice grill area, right?
Yeah, some of the balconies needed some major repairs. The wood, is rotting, so we need to do a lot of repair and repainting of the balconies to kind of give it also a fresher look to on the exterior. Yeah.
And I think adding more exterior lighting and I think installation of gutters.
Yeah.
Gutters are definitely helpful.
Yes.
Yes, hopefully we'll have better maintained balconies after installing those.
Well, let's pivot and shift here to property management. I know you mentioned it a little bit already earlier on, how you're going to be keeping on the current people that are on site, which sounds like there's 2, I think. Is there more than 2 or just the 2?
In terms of the staff, yeah, so we have the office manager and then we have the part-time agent. So we are keeping those 2. And we have a ground maintenance guy as well.
Okay, so like 2.5 people.
2.5.
2.5 people. And are you doing your own property management, or do you have a local property management company there that's actually a third party?
We have a local property manager that's third party.
Okay. And is it the same property management company that was on there before, or is it a different company?
They didn't have one before.
Okay.
So the owner operated, but we kept the on-site manager and the leasing manager. There was a previous maintenance supervisor, but he was let go before we took over. So we actually are looking for a fill position. So if you know anybody who has an HVAC certified in Dothan, Alabama, please reach out to us. So, but we do have a third party manager that is local to that area, and we chose them because they do have an in-house construction crew. And at the time, I mean, where we were looking at this deal, we knew there were supplies issue and labor shortages. So one of the very reasons why we picked this property manager, because they do have an in-house construction team.
So speaking of the construction, what's the timeline that you guys underwrote for as far as getting those renovations completed and stabilized?
Yeah, so we do it. So we in our performer project, we did it over 24
4
months.
Yeah.
Yes. So we did it. So it's about 4 or 5 units per month.
Mhm.
So after takeover, I'm working with the property manager and the construction team. We are now targeting 8 unit per month turns, which we actually are doing right now. And it's to be delivered right now it's October, so it'll be delivered in November. So we're a little bit ahead of schedule. So we'll like to keep it that way, and at least into the winter months, because leasing's a little slower. But there are people rolling off the leases. The leases has been expired. So those are opportunities where we have to take advantage of and be able to kind of churn it and be able to renovate it. So we're trying to get the low-hanging fruits first. So
Very good. Let's pivot and move over to the financing. Walk us through how you financed this deal.
yes, we financed it with a bridge loan. 75% LTV, 2-year IO period with an option to extend 1 more year. Is there anything else that you want to ask?
There was, yeah.
Yes.
So walk us through some of the additional terms like the interest rate, amortization, balloon period, things like that. Obviously, the balloon period is obviously after the 3 years, so the 2 + 1 there. But was it 25-year, 30-year?
30 years. Yeah.
So a 30-year, and then what was the interest rate?
It was 3.85.
It's
Go ahead, Lana.
3.75 over LIBOR.
Oh,
Yeah.
3.75.
Yes.
Sorry. Oh my goodness. 3.75. And we did purchase a cap rate on it.
So in this case, the bridge lender didn't require it, but that's something we actually decided to do because it actually wasn't that much more expensive. And so kind of, again, we like to be risk adverse, so peace of mind. We figured, okay, it's not that much additional cost. So let's just do it and have that security and not have to think about it and worry about where rates would go.
Yeah, no, it's definitely a smart move. I mean, even if the lenders don't require it, like you said, it's not that expensive. I mean, on this type of a loan, it was probably maybe what, $15,000 to $25,000, something like that. I mean, it's not that expensive for that little bit of money to pay up front to go, I have that safety and security of mind that if the interest rates go way up, I'm still good.
Exactly.
Yeah, we have enough. Yeah.
It's surprising that the lender didn't require it, because most lenders do require it because they want to protect their downside too.
Absolutely. Yeah. We were surprised too. We're like, okay, well, we'll get it anyway.
Yeah, no, it's definitely a smart move there. Now, as far as the LTV, the 75%, they with it being loan to value, they did not include any of the CapEx in the loan.
So that actually includes all of the CapEx. So we covered all of the CapEx.
Okay. All right. So we did 75%. So that includes the CapEx piece of it as well, which is great. I'm assuming that they probably included some of the closing costs as well.
That's a great question.
Closing costs is not included.
Yeah, I don't think that's included.
Maybe partial of it, but not too much. So it's 75% of the purchase price and 100% of the rehab. So it's come out to around $7.1 million of the loan size.
Okay, good.
You're asking questions where I have to open up my document.
No worries at all. No worries at all. You guys did great there. So talk to me a little bit about how you structured this deal with investors.
Sure. So this was a 70-30 split with our investors with an 8% pref. And the total hold period was over 6 years.
So you said 6 years?
Mm-hmm.
6 years.
6 years hold period. Mm-hmm.
So it was, what's the plan after the bridge loan goes up in 2 to 3 years? So I'm assuming you guys are planning on hopefully getting it all done within those first 24 months and hopefully doing a refinance to be able to pull out some capital, or even maybe at that time potentially sell it to be able to capitalize on the gains as well, depending on how the market is.
Yes,
yep.
Dan.
He took our answer. Yeah. Words right out of our mouth. That's exactly what we're
Yes. Yes, we're going to evaluate. Yeah, once we get closer to the 2-year mark, where are we in the renovation plan? Given we want to be a little bit, we gave us another extra year just in case if we need to finish up any renovation further renovation. So the 1-year extension really comes in handy just in case. But typically
Right.
what we've seen is 18 to 24 months is a good number
Good.
too.
But we
Good.
did underwrite it that we would refi into a long-term, more conventional, like agency type loan after that, after the 3rd year.
Okay.
Yeah.
And do you have a projection on how much capital you're going to potentially be able to return on the refi?
Yep. And I would say 30%, about 30%.
Okay. That's good. It's
Hopefully.
a good, healthy percentage.
Yep.
And again, that's a conservative percentage, so it could possibly be more than
Yeah.
that. Especially when we're dealing with a bunch of auditors and risk-averse people, which is good, for underwriting and stuff. So at the safe number would be 30%, but hopefully we can get closer to 40 to maybe 80%, which would be really nice, depending on
Yeah.
how the market is.
Mhm.
Or sell it sooner. You never know. I mean, we've had some deals lately that we've been able to sell, about 3 years sooner than our plan is, and they've well surpassed our 5-year projections on some of the assets that we've actually been able to do. So, so how did you end up raising this money from your investors?
So yeah, we essentially our raise was like $3.22 million. That was our target. And we just tapped into the network on our GP team. And we sourced the GP team essentially from our mastermind group. Relationships with people that we have within the mastermind group, we pulled onto our team.
So how many investors did you end up having in this project?
So we had 58 investors.
58 investors, and just running the math here, you probably already know it, but I'm going to run the math here as well. 58 investors, average investments right around $55,000, somewhere around in there.
Right. 55K. Yes.
55K. And how many of those investors were new investors, and how many of them were ones that had maybe invested in a multifamily asset in the past?
Let me see. I think
I know it's I don't know the exact number, we're just kind of ballpark, but
yeah, I would say maybe, let me see, we did pull quite a few new people from our side onto the deal. So I'm just gonna, hard to say, Dan, but I'm gonna say
I think we had a good mix of,
a really good mix.
investors who knew multifamily, knew us, and it was like no brainer, I'm in. And then, but interestingly enough, we had a lot of new investors to multifamily and also to Alabama.
That's good. That's good.
Yeah.
So as we're kind of wrapping up the episode right now, can you think of anything that we haven't touched on yet that might be something interesting to talk about this acquisition before we finish up?
Anything interesting that wasn't covered yet, ladies?
I don't know.
Well, I mean, sometimes we get to this point, we got it all covered. I just want to make sure if there wasn't anything like different special nuance or something that happened on the property that we didn't cover yet. So, from property management or due diligence, whether it be physical or financial or anything. It sounds like we pretty much have covered it all.
Yeah, I think, maybe one aspect is that, we always prepare for the worst. So I think that's why we do a lot of due diligence upfront. And I think that might be prepare us or over prepare. You always want to over prepare. So we kind of, when we went to a physical due diligence, we still come out thinking that because the lender has to do their own inspection. So we thought maybe we'll still get a bunch of items from them, and we'll have to increase our CapEx budgets to account for these remediations. But when they provide a third-party inspector report, it came out surprisingly only come up to around $8,000 of repair that we need to do, immediate repair, and most of them we already budgeted in our CapEx. So and we've seen lender repair items that comes out to 6 digits. So in the grand scheme of things, 8,000 is like a drop in the bucket. So we're happy to include it and do it. So overall, I think what I want to say is that we prepare for the worst, but I think we were pleasantly surprised that the deal came out clean. The seller was very reasonable. So,
I mean, I think one context that we probably didn't share was this was actually our first deal that we took down. So we were so surprised throughout the whole process of how things and how easy things were moving and how smoothly things were moving. But, the kind of the skeptical audit mindset that we always have is like, when is the ball gonna drop? And we're like at a seat of our pants, like the edge of our seat throughout the whole process. Like, is there something else that we missed? Is there anything else that could go wrong? And so because we were constantly thinking about all the what could go wrongs throughout basically from like March to we close in September, we're just like gripping our seats, like what else is there? And I don't know if all deals will go like this. We've been told that, they don't always go this smoothly. So always anticipate, the worst of things. But I think for being our first year, there was a lot of things that we learned for sure. We've learned patience is a big one. And really trusting, who you partner with and you work with is really important. So those relationships are important, from who you work with, from a lawyer, who you work with, from a property manager, who you work with for your lender, your broker. All those relationships were really important. And so that's, we really saw the culmination of all of that come together on this deal. It's, yeah.
No, that's good. That's a good way to kind of wrap it up and finish things up. Good insights throughout the podcast today, as well as some of those finishing thoughts there, Lana. Thank you for that. As well as you, Maggie and Jen. Thank you guys for all three of you being here and participating. How can the listeners reach out to you if they have some further questions for you about this acquisition, or they just want to continue to follow you more?
Sure. People can find us on our website at www.sageinvestinggroup.com.
That's sageinvestinggroup.com. Again, thank you all three for being here and participating. We're looking forward to, I'm personally looking forward to continuing to follow all three of you as you continue to grow Sage Investing Group, and looking forward to having you on a future episode as you close more deals.
Thank you so much, Dan.
Return soon.
It was so fun being on your podcast. Thank you for having us.
Thank you.
You're very welcome. Look forward to having you on more.
Thank you.
Talk to you later.